Alrighty, what is going on, Discord family, and welcome back to another edition of Market Review with me, t.hobbs. Today is January 14th, 2025, year of our Lord, and man, what a freaking day in the market. I mean, it was beautiful. Price action was awesome. The AM session, as usual, up until about 11 o'clock, was a little shaky. Sometimes we get that aggressive move, but sometimes we just get that consolidation where the market's generating liquidity for it to do what it really wants to do. We did get PPI numbers today, and like I talked to the Discord. I talked to them about, hey, this information is very, very bullish, right? So I'm no longer thinking we're going lower from here, right? I'm more so on the mindset of, hey, we could be getting ready to push up higher from here, right? Just looking at that PPI data, the information is coming down. I should say the inflation report data is starting to come down. But anyway, that's neither here nor there. Let's talk about the pre-market plan. I'll discuss some of the trades I took on the day. I'll talk about the S&P 500. I'll briefly discuss the NASDAQ and the Dow Jones. But pre-market plan for the Dow Jones. Current conditions, we were bullish. We were in a bullish retrace of a bearish trend. We were bullish as long as we stayed above 41,981, which we did all the way down here. We were bearish as long as we stayed below 903. You can see we're getting closer to this level, but we did tap into this liquidity, and then we pushed all the way back down to the PM session lows. I said macro, higher low has been placed, meaning inside of the bearish trend. And now we are potentially making the high of the week, is what I thought, right? Doesn't mean I'm going to play it that way. It's just what I'm thinking, right? Bulls need to continue to push above 42,903. You can see that they did that, right? For me to be convinced they are willing to take over. Otherwise, after the data report, I want to continue to be bearish below 42,903, right? And like I said, I post these videos on YouTube. So if you guys are watching this on YouTube, I post these pre-market plans inside of the Discord an hour and a half, almost 2 hours before the market is open. So everything that I'm placing is not in hindsight. It's always, forward thinking, right? Anyway, so inside of our range, what did we have? We had the high at 42,567, the low at 42,516, right? The high and the low. Our low was 42,443 through 42,365, right? Highs and lows. So what was I looking to play? Well, I was looking to be a bear at 4-hour supply, 42,758 to 42,900, and look to target 4-hour demand, right? All the way back down here at 41,847. I should have put a couple pit stops in there, right? Because I knew that there was a high probability that we make a couple pit stops, right? Obviously, previous day high, PM session lows, right? That was the only bearish plan I had other than playing inside of the range, right? Because I knew, hey, this could be a higher low. If we're going to higher low, it's going to be basically from this low here. Bullish. If we got extremely bullish, I was looking for break and retest above 42,903. We never came up there, but this plan will still be in play for tomorrow. Down here, if we came back down, I was still looking to be a bull at 41,847 through 41,581 and looking to long the market back up to this little 4-hour support at 41,981. That trade never came in play, but the two trades that did come in play, I took them and they were really nice. Well, I took one of them, but they were really nice trades, right? And I'm going to discuss that when we drop down to the 15-minute chart, right? All right, so let's go ahead and take this away. Now let's come down to the 15-minute here. Okay, so as you can see, right, if we're looking at the market from a liquidity standpoint, right, just understanding where the liquidity sits throughout all the sessions, in my opinion, is important. If you don't view it as important, that's fine. But this is how I like to view the market, right? Sydney, right, starts at 6 p.m., right? Hey, hang on one second. All right, so Sydney, London, and Tokyo, right? Like these are all sessions that provide liquidity for the market getting prepared to go into the next session. So for me, it would behoove you to understand what that liquidity is doing, okay? So Sydney, coming from New York, right? Sydney was putting in higher lows, right? And higher highs, higher lows, higher highs, right? So when we got into New York, we came in and put that higher high in, right? and I was looking to short off 758, right? I took shorts at 712, right? And I was targeting these lows down here. I got out at around midnight price. It was a good trade. It was basically the only trade I took on my Top Step account, right? And then on my Apex account, I took the retrace at 596. Yeah, I got short 596 and then took it all the way down to these lows down here, and I got out for a really nice move. Then I was upset because I went to sleep and I should have just went and got long on this thing. It was really nice. But anyway, so that's how I was looking at the liquidity. Let's drop down to the macros, right? And go down to the 1 minute chart, and you can see how structure, time, right, and price all follow each other, right? Like, you can understand market structure, right? And then you can put it together with time to create really nice entry criteria, right? That's based off a timed sequence, so to speak, right? So we got this initial rally candle, right? But we had already broken structure to the downside, right? So you were anticipating the market rallying up to the high, right? And then coming back down. I took longs here, right? Inside of my Top Step X account as well. I forgot about that trade. And then the market came back down, and then it was like, okay, everything up here is bearish. So that's when I ended up taking shorts at 712 right up here at these highs and getting out down here at midnight price, right? But we traded down into 950 right at midnight, right at the top of our previous day high, right? And then rallied right back up to the weekly fib, which set at 42,751, okay? We came all the way back down, right, into the previous day high, and this time we broke this low, which was an indication that we were going lower, okay? We came back up, swept the high, just like we swept the high up here. We swept the high, trapping more bulls, right, in order for the market to trade up into 1125 and then down into 1150. Right at 12 o'clock, we break the structural high at 42,465, indicating that the market is now bullish, right? This is our new dealing range, this low and this high here, right? We tap back into 50% of that range, right? Previous high, previous low, right? Let me change this color so you guys can see that, right? We tap back into this range, right? 50%, and then we start to take off. And I mean, this rally was impressive, right? Like, I missed this whole thing, but this rally was very impressive, right? We pushed down into 1225, gave you another entry criteria, pushed up into 110, down into 110, and then push up just straight through it, right? Push back into the supply zone, again, picking up more of that liquidity, right? And then another beautiful change of character, breaking below the lows. Now we're bearish. Everything above this high, you should be looking to short. The market trades straight down back into the PM session high, and then commenced to rally aggressively back above for another push to the bull side, right? One thing that I've been paying attention to is whatever we do inside of 1 o'clock, right? If 1 o'clock brings the low and 3 o'clock or 1600 brings the high, that gives you a very bullish dealing range for the next day. We did the same thing yesterday and we ended up being bullish today. Now we're doing it again. So I'm anticipating more bullish activity headed into tomorrow, right? So the pre-market plan worked out to a T. We were looking for longs off the PM session lows. By this time I was already out of the market. We were looking for longs basically off the retest of the PM session high. That worked out. We were looking for shorts off the 4-hour supply. That worked out, right? Like, every single item that we were looking for, areas in which we were looking to short or get long, ended up working out very, very cleanly. So that's what you want to see when you're creating a plan, and then just make sure you're following that particular plan. So let's move over to the S&P 500, and I wanted to highlight one of our Discord members' pre-market plan. So we'll use that as a guide on the day, okay? Shout out to Trading Yoga Girl. You can see she wrote this plan at 7:34 in the morning. Current conditions, she said that we were bearish. We were bullish as long as we stayed above 5907, right? So you can see 5907, we never got back above that. So everything below this, she was viewing as bearish, right? So 5809, bearish below. So you go down to 5809, you can see we never broke down there. So this was basically her dealing range from here to here, okay? She created a really awesome plan. As long as, she said, we are currently trading slightly below true day, which is midnight, as I write this plan at 7:40. Overnight, we continued, tried to trade out of the PM session range, only to find our way back and hang out on the top of the range at 58.83. And I'll explain all this when we go back to the charts. She said, look to short the highs and lows of the range and break and retest off the highs and lows. The high 58.83 to 58.78, the low 58.49 to 58.58. We had 4-hour supply above us at 59.3675 to 59.5950. 4-hour demand beneath us at 57.9750 to 58.26. Those levels never really got interacted with. But here's where the sauce came in. Bullish, look for buyers to reclaim 58.92 and hold the top of the range at 58.83, which that happened. You'll see it. Bullish, look for failed breakdown. This was the sauce right here. She said, look for a failed breakdown to the bottom of the range at 58.49 to 58.58. And you can see right down here is where this trade was perfect. Failed break of structure below 58.46, 58.58, right? 58.58 through 58.46, or the daily fib. Failed break of this low, and you could instantly get long right here. So she ended up taking trades earlier, and I don't think any of us were even in the market. She might have been in the market. I wasn't in the market, so I don't know. But this is why I create trading plans, because for me, it's my weapon of choice. Like, some people like, you know, strategy. Some people like market structure. Some people like, you know, session volume profile. People like trend lines, ICT, whatever. My weapon of choice is a mixture of a lot of things, but ultimately my pre-market plan is what I choose to engage, how I choose to engage with the market, right? And as long as I've done the data to understand how accurate that plan is, that's all that matters. So let's drop down to the 1 minute and let's see how price was delivered inside of macro time, okay? If we look, same thesis here. I'm not gonna beat a dead horse. 920 traded up. We're looking for the push down at 930. We got it. Swing up above the highs, and then it was just dump session. Drop at 950, push up. Easy long or easy short, easy long, right? Easy short, easy long, right? Then the market started pushing down. Now, once we get below the previous day high, it's basically range territory, right? We understand the range up here. We look to get short inside of time at 1125. We take shorts at 58.78. We take it down to the daily fib, and guess what? We get our beautiful double bottom, break a structure here. We come back down, double bottom, you get your double tap, sweep of the lows, and then it's on and popping. Easy money right back up to those highs, back into this consolidation, and then coming back down and then failing to get back above this high. So we'll see how the S&P 500 and the NASDAQ want to trade. The Dow Jones is looking stronger than ever. The S&P 500 looks like it's still consolidating, right? But still looking like it wants to pop out strong, right? And then that brings me to my last instrument, which is the NASDAQ. The NASDAQ is underperforming the other three instruments, meaning we're still lower, but we're still holding true to the bullish trend, right? So I'll be looking for the NASDAQ to start to get back above these highs tomorrow, continue this bullish behavior, especially if the CPI data comes out with strong data, just like the PPI data did as well. So like I said, I'm not going to review the NASDAQ. It's pretty cut and dry in regards to what it did. It did exactly the same thing as the Dow Jones did, just at a different level. Same thing with the S&P. Everything was sauced up today. I didn't make a pre-market plan for it, so I usually like to review it if I did a pre-market plan, but those are only on request outside of my own instrument. That being said, this is the market review. My name is T.Hobbs. I hope you guys enjoy these, and I will catch you on the next one. Peace.